Hey guys, Kill here. Welcome back to another weekend edition of The Trading Edge, your weekly look around the markets. As always, I'm your host, Akil Stokes, Forex trader, trading coach, and one of the co-founders over at Tier1Trading.com. Now, before we get into today's video, you notice that each week I kind of put this little rundown of not only pairs we're looking at in the video, but also economic events that you should pay attention to. I'm not a big fan of fundamental trading. I don't base any of my trading decisions off of fundamentals. You know, sometimes we take them into account as far as looking for home run trades if everything aligns. But mainly the reason that I share this with you is because I want you guys to be aware of what's coming up. And then I want you to do your own research to determine how you should handle it. And I say that because I got an interesting message this week from a trader who was saying, I think it was had to be Wednesday, right? FOMC day, was saying, hey, Akil, markets got goofy in the afternoon. What happened? And I know there are probably many of traders out there that were unaware of the events and maybe got caught up in some of that mess as well. And I think more so than looking at fundamentals from a perspective of how can I trade them, how can I guess, what the number is, or in reality, guess what the reaction to the number will be. I think the best thing you can do, especially if you're technically based, is just know when to keep your powder dry, know when to stay out of the market, when to have zero exposure. That way you don't get caught up in any type of weird type moves that may cost you money. And then, you can get back to business once the markets normalize again. So that's the reason I put it up there. We do talk about it in the live room before each session, but I do expect you guys to kind of do your own research and determine what's important to you and what's not important. Now, in today's video, we're going to talk a lot about head and shoulders patterns. So let's hop right into it. Real quick, just to give you guys a very brief run through of what a head and shoulders pattern is. It is a multi-moved, multi-legged, whatever you want to call it, reversal pattern. It's one of the classic patterns in the market. Essentially, it happens when a trend runs out of steam and it reverses. So if you can imagine a long directional move in the market, followed by a brief retracement, which is a sign for a stronger trend. We then, however, followed it up with a smaller extension, which is a sign that the trend may be weakening. The next move after that is going to be our move, another deep retracement. This can come in many different variations, and we'll talk a little bit about different ways to handle that today. But a very deep retracement, essentially, which is another sign of a slowing down trend, a weaker trend. And then a move back up, a potential extension that never ends up extending, right? And then eventually you get some that reversal. And this is called a head and shoulders pattern because it kind of looks like the profile of your head and shoulders, right? This would be your left shoulder. This would be your head sticking out above the rest. This would be your right shoulder, and this is called your neckline. And again, I want to give you guys a little bit of background information on that, just so this video makes sense. I'm mainly talking to the newer traders that are watching on YouTube. Obviously, you guys on the platform, there's a whole training course on this. But there are three ways to typically trade this. One is going to be aggressively at the right shoulder. Another one is going to be at the break. And then another one would be waiting for the pullback. Oh, wrong tool there. Sorry. The pullback to that neckline and then the continuation down. So with that being said, let's hop into our first pair, which is going to be the pound yen. And you can see the pound yen had a nice head and shoulders pattern on it this week. There are a lot of head and shoulders patterns this week, just based off of, again, kind of the funky movement in the markets and then the corrections off of that. But you can see our head and shoulders set up here. We're going to go, I think there's a tool for this if I'm not mistaken. Yep. It doesn't matter where we start here, but you have your left shoulder. Again, you have that short retracement, really just a sideways consolidation here. So a very good sign for a strong trend. We then have an extension followed by that very deep pullback. You can see a symmetrical right shoulder. And when I say symmetrical right shoulder, it means that basically the right shoulder looks exactly right. This area looks exactly like the left area. It retraces to the same level. This one actually even forms a similar type of consolidation before eventually breaking that neckline and retracing to the downside. Now, I didn't have a big high expectations for follow through on this. We had this inside level of structure here, so it wasn't a pattern that I was interested in just because there wasn't a lot of room. But now that we violate this level and even this little mini level in here, I do think we can push back lower down to really this 133.50s level. So it'll be interesting to see what price action does here. But if we go down, I guess technically you can look at it on the 4 hour, but if we go down to an hourly chart, right, we're also forming a potential advanced pattern formation. So whether we end up putting in another extension lower or whether we just consolidate for a little bit, there is the potential that we could have a pattern trading opportunity once again at that or near that right shoulder neckline area. So if we take our Fibonacci retracement tool right here and we go from our swing high to our swing low, this is going to be our X2A leg, our initial impulse leg. Now, make sure you check your data, because where this completes is going to make a difference in how you trade. You see that mine does hit the 618 Fibonacci retracement, meaning that I am on Gartley pattern alert. If you are shallow, if you're a little bit shy of that 618 Fibonacci retracement, it's going to be a completely different story. You're going to be on an alert for a bat pattern. And what's the difference between that? Well, I'll show you. The kill zone, potential reversal zone, whatever you want to call it, for our Gartley pattern is going to look something like this. I cannot find my drawing tools. Here we go. It's going to look something like this, right? Our X leg is going to be the upper limit, the ceiling of that, and we're going to go all the way down to this 786, so a zone like that. For the bat pattern, it is going to be a little bit different, right? We're still going to have that X leg right here being the top of our zone, but now that decompletion is a little bit higher, so it's going to be quite a higher entry point, the difference between 136.63s and about 137 flat, so about 37.40 pips in that area. And again, this is a bearish potential pattern formation, a bearish potential Gartley, so you'd be looking for a move down. And I bring the head and shoulders into it previously because we know with patterns, we can trade them a few ways. We can trade them outright just as patterns. We can trade them as an entry reason into a bigger picture trade, like the head and shoulders retest, or we can do some kind of combination of both, where maybe we do a partial position at the pattern completion, another partial position holding it on for a bigger trade with the bigger picture idea as well. So next we're going to head over to the Aussie dollar. This was a pair we looked at last week. Remember, beautiful situation here where we had price action trading at previous structure highs. We also had that rising channel. The market did exactly what we would expect it to do, right? And now that we go down to a lower time frame, we want to ask ourselves the question, what is next, right? Here's a kind of that rising channel right there that fell over. We actually came up and retested it as well, and boom, fell again. But what's interesting here is if we go down to an hourly chart, right, you're going to have the same type of situation here where if price action were to come up and retest that level, we would have an advanced pattern formation. So once again, Fibonacci retracement from our swing high to swing low right here. Once again, you can see we come to that 618 Fibonacci retracement level on that B leg, putting us on an alert for a potential Gartley pattern. So just like we looked at on, I believe it was the pound yen that was before this, we're looking at a move like this: X to A to B, B to C. And this time, because the B leg was a little bit higher, our decompletion is actually going to be closer to that 886 than the 786. So a little bit of a deeper completion, which I personally prefer because that just means my stop loss is going to be a little bit shorter. So I have to risk a little bit less on it, which is not a bad thing for me. Now, when you look at the 4 hour here and you ask yourself, or you remind yourself that price action did break off of a previous level of structure, you may be asking yourself the question, well, where can price go next? And we have a little bit of a structure shelf lower than this level. Certainly more recent structure, we certainly have room to push lower, maybe down to 65 50s now that we've, I guess if we can violate this 68 level. So this could be another situation where maybe you hold on or treat this kind of like a hybrid type of pattern where you hold on for half of that position, or at least a part of that position, for a bigger run lower. Again, we haven't broken the 68 level. That would be a good sign to push lower if we did. But of course, just giving you guys options here and how you want to play this. But definitely, if we do continue up, this is going to be a nice looking bearish Gartley pattern, completing up at, what do we hear, 69.42s. All right, so we're not going to spend too much time on this one, but this was another example. I probably should have looked at this right after the pound yen, but the Aussie yen was another good example of a head and shoulders pattern that was on our radar for the week, played out very nicely right down to our completion zone, and is now putting in a potential advanced pattern for a retest. So again, we'll go through this really, really quickly because it's basically a carbon copy of the pound yen. But once again, you can see after our breakout, we got a little bit of relief. This one does not come to the 618 Fibonacci retracement, rather only the 50%. So what we're looking for here on the Aussie yen down on the hourly is going to be a potential bat pattern right here at the 886, coming right back into that right shoulder area. So short and sweet, but just a little bit of a review. And again, the market gives you common things across the board. What matters most is our ability to spot it. Now, one pair that's going to be a little bit different is going to be the Euro New Zealand. This was another one from last week where we were aiming for that 7,200 level, that 172, I should say. Excuse me. And we did hit that level, and we came there. We basically held at that psychological number, and the market started putting in a little bit of a reversal. And if you just use kind of the basic elements of reading a price chart that we teach, you're going to see that we have that violation, right? So we have the market going here, a little outside return action, new structure low. We have what looks like it could be a complex pullback, and then we have a higher high, higher close, putting us into a bullish rotation. Now, what's really important here is we had a good conversation in the live room about looking for trading opportunities right here as we retested structure. And I told our live room members I would not do so. And they're like, why? Well, why not? It looks like a normal pullback trade. And this is why that higher time frame analysis is so important. If you remember what we looked at on the higher time frame, we predicted a move down to 172s, right? Once price got to 172s, right, I consider that as the move has already been made. Therefore, I am no longer looking for it to get short, right? It's basically like, betting on something, having the result, and then betting that that result is going to happen twice before the opposite happens. The opposite is it moving to a level where you would be stopped out. And you got to be very careful about that, about shooting for the move after the move has already been done. And that's a big problem that I see with lots of traders. And I guess that thought process, not to go on too much of a rant, but that thought process comes more from looking for trades instead of looking to do analysis. I think that if you look to do analysis, if you do that top-down analysis, higher time frame, IPDE, identify, predict, decide, execute, you put yourself in a position where you're just trying to understand the story that the market is telling you. And then you can do stuff where you can see what's happening. You can make predictions on where price is likely to go. I think we're going to go here. Based on this, we should move here. You're not kind of blinded by a confirmation bias, I guess. And it allows you to kind of think outside the box. Speaking of thinking, I don't have it loaded up for you, but there's a great article by Brett Steinberger, Dr. Brett Steinberger, friend of Tier 1 Trading. We're honored to say that, about meditation. I'll put the link below in the show notes, whatever you want to call it, the YouTube notes. But I shared it the other day. Can meditation make us better traders and investors? And I think it's a very good read. Some of my favorite people are mentioned in this, Denise Shull as well. So I'll put it below, but definitely it's a short read, as you can see. So no excuses, do it. You're going to become a better trader. It's going to help your trading. Bang. But I think when you go into the markets and you look for opportunity, you're just looking for trades. How can I trade this? How can I trade that? You're kind of blinded to the bigger picture. So you see what could be a trend continuation opportunity, a pullback opportunity, but instead of seeing the bigger picture, you're seeing the small picture. And I guess sometimes you fall victim to the other dangers that exist because you're not getting that perspective. I think there's a cool way of saying that. See the trees, not the forest for the trees. I don't know. Type it below. You guys are good with the philosophical stuff. Me not smart. But there is some type of philosophical word term that makes it sound much better than what I just did. Moving on. What we have here is also a head and shoulders pattern, just not your traditional one. And again, talking the other day with traders about trading books, there are not a lot of books I like on technical analysis. I put out a list the other day of some of my favorite trading books. I'm sure I can share it here with some post editing as well. But one of the books, and there are very little books that I like on technical analysis because at least a lot of the books I read when I was learning just give you picture perfect examples. They give you beautiful head and shoulders and beautiful double tops and double bottoms and flags and pennants, and it makes you seem like they always work all the time. In reality, things don't always look that pretty, right? It's the difference between the difference between like a dating site and you see someone's profile pic on the dating site and it's them at their best with the perfect sunlight, and then you see them in real life and it's like, hey, is that, you kind of look like them, but it just looks a little bit different. And that's why it's so important that we learn how to train our eyes to view the markets, because if we're always set on looking for that perfect opportunity, we're going to miss some very good opportunities in the market. So this is going to be a head and shoulders pattern. I'll erase this and draw it back on, but it's not going to look like your traditional one, right? You're going to have your swing high to swing low, right? Your right shoulder forming right there. This is going to be your head. This entire complex pullback is going to be your move to your neckline, and eventually what we're hoping is going to be our right shoulder. Now, what's different about this opportunity is that the neckline is violated. Now, this is going to give us a sloping, an upward sloping trend line if you do your necklines with trend lines instead of just horizontal support and resistance. But this also offers up an opportunity, right? Earlier in the session, I talked about 3 ways to trade the head and shoulders pattern, one being an aggressive way. And aggressive is aggressive for a reason. There's more risk involved. And for you guys that are on the platform, right, we had this very cool session. I want you to review it. I didn't put it in the training, and I don't think I will, but if you go to Wednesday's live room session, so go to our live trading rooms over here, go down to the Wednesday New York session, I believe. Let me just check. Bitcoin pizza story. Yeah. So if you go to the Wednesday live room session, and I don't have an exact time, but it comes somewhere after the hour mark, after we talked about oil, there's a lesson on head and shoulders trading. And this is something that one of our traders, one of the members of our community did. He put in a very specific rule to trade them aggressively, to trade that aggressive right shoulder. And it's just cool because what he's doing is he's taking the concepts that we've taught you on the platform. He's taking what he's learned from various places, and he's basically, he found a way to trade this pattern aggressively based off his own rules. And I think it's really cool to see that dynamic, because that's what we encourage, right? Yes, you can just pick up a strategy and trade it as per, right? Per the default rules. But what we really want you to do, and this goes for any traders, those of you just in general, right? We want you to find something that works. Doesn't matter what it is. It could be anything you want. Find something that works and then make it your own. Find a way to make it match your philosophy, match your personality, because we're all a little bit different of risk appetite, aggressiveness, even philosophy on trending versus counter trend, right? So every single strategy on there is not going to fit you like a glove, right? Find something that works and then take your skill and make it work the way that you want. And that's how you become a trader with obviously a system that has a positive expectancy, obviously an edge that you can exploit, but most importantly, the psychological discipline to consistently execute that strategy and system instead of self-sabotaging because of doubt and fear and all that other stuff. But this is going to be a good example to aggressively trade the right shoulder, because we're going to have a few things here, right? One, we have a nice little level of structure there. So if we can retrace into that level of structure, right, we're going to get an opportunity to buy it. And you can see that, again, we don't know when this is going to happen. You got to wait for your entry reason. But regardless, and I'm going to talk about this a little bit different than our trader does. Again, you can just review that session to see the specifics of what he does. But if you're trading it just up to a retest of our right neckline, you can see you have a brilliant risk reward, right? You can see about 3 to 1 if you're just getting below these lows. If you want to be even more conservative and get below the head, you're still able to get a bigger than 1 to 1 risk reward. So this is an example of trading aggressively on the right shoulder, where the other ones were more about looking at the retest of structure or whatnot. One more pair to look at, then I'll let you guys go. We're going to look at the dollar Chinese yuan. We don't look at this a lot. I think the last time I looked at this, there was like probably a wedge pattern, right? Just drawn on your chart that had a false breakout. But what we're doing here is, well, first and foremost, from the higher time frame, we came down to retest previous structure low, right? You know you couldn't have a video without some random Akil nonsense, right? So we came down to retest previous structure low. So we have a hold at structure right now, and price action is consolidating. It's kind of making up its mind what it wants to do. Can we break lower? Of course. Can we break higher? Sure. At this point, we just don't know. All we can do is predict and manage risk if we do get into a trade. If we go down to a 4-hour chart, you're going to see something interesting. And you could make the case for this as being a head and shoulders as well. But we're starting to consolidate, right? We have price action, essentially, even if we take this one into account, price action testing this level multiple times, with the last retracement being very shallow and the last test come up here, right? I love to look at the differences between the different retracements, right? Patterns of getting higher and higher are very important signs of predicting which way the breakout is likely to come. And that's something that I've picked up on over the last couple of years. But regardless, what you should be looking for is a violation of these highs, right? If we can violate these highs, if I can get my line tool working, gosh, I'm bad on trading view. Used to Ninja Trader. But if I can get my line tool if we can violate those highs, there we go. Long day. Just got off my Saturday morning meeting. If we can violate those highs, we can certainly push up. So look for a violation of these highs right here, right? If we do, we can certainly work up to our next level of structure. So a nice opportunity here on the dollar Chinese yuan. So that's it, guys. I'm going to get you out of here before things get more awkward. As always, before you do, hit that like button, share this video, please. Leave me a comment if you have any questions, comments, or concerns. I always answer each and every one of them, so don't be shy. Many of those questions become episodes of the Trading Coach podcast. Ask away, because not only are you helping yourself, but you're helping thousands and thousands of other traders out there by asking questions that maybe they had and were a little bit shy to ask, or maybe questions that they didn't even know existed yet, and it's going to help them later on. So keep that up. I hope you guys have a great weekend. Stay safe, and until next time, plan your trade, trade your plan. Take care.